All right, Cheryl, thank you. Absolutely better than expected. Even though April was revised downward, you got 139,000 jobs created in the month of May. Yeah, a decline of government workers. That's exactly what President Trump has been trying to do, shrink government, allow the private enterprise sector to actually lead the economy here. And that's why you've got this rally. People were unsure of what was happening with jobs after that ADP number on Wednesday was weaker than expected. And you've got investors now saying things are not as weak as some expected. Dow Industrial's up 251 right now. Joining me now with reaction is Share CEO Joel Schulman, American Staffing Association board member and former chair Joni Biley, Heritage Foundation president and Trump economic advisor Steve Moore, Job Creators Network CEO Alfredo Ortiz, and also with us is John Lonsky. And of course, we just heard from Cheryl. Give us your reaction here to a better than expected report as this market looks like it's on fire. Steve Moore, your thoughts?
Yeah, a pretty decent report. I was glad to see the 139,000 jobs. That's a pretty good number. Looking at beneath the numbers, though, there was a decline in one of the surveys of 500,000 people in the labor force. Look, the big problem right now, and it's kind of a good problem to have, we have 7.5 million job openings in this country, Maria, which is a huge number of unfilled jobs, and we just don't have the workers now to fill them. And so when you see fewer Americans working this month, that's a problem. We've got to figure out how we can get people back into the workforce of working age. But overall, if you look at the statistics that have come out over the last 3 weeks or so, Maria, this is a blockbuster economy we're seeing. You talked the other day about the fact that 4.5% GDP for the second quarter, low inflation. This is telling us right now the jobs are out there for people who want them.
Yeah, the jobs are certainly there in this report. In healthcare, I mean, leisure and hospitality are lower paying jobs, but you still see a consistency in terms of job creation there, Joni. Where do you identify the best jobs here?
Yeah, there's still, and to Steve's point, I want to come to that JOLTS report that was released this week as well. We did see an increase in job openings, which is an excellent sign. And the job openings are in healthcare, they're in the tech sector. We're seeing there's a demand certainly for software developers, cybersecurity, data analysts. There's many positions. What I was most excited about when I looked at that JOLTS report is that the biggest increase was in the professional and business service sector. That sector actually lost jobs this month. But what I'm optimistic about is that those jobs are going to come back because we see employers increasing their openings. They need to hire. Employers entered this year very optimistic about hiring. Unfortunately, they're all in this wait and see mode. There's just so much uncertainty. But I really think, Maria, that things could open up. We could have a couple of blockbuster job months in the future if we just get more confidence from CEOs and CFOs about investing in their businesses. Yeah, so there are opportunities out there.
Yeah, the labor participation rate at 62.4%. Dow Industrial's up almost 300, Joel. Give us your sense of what's driving markets right now.
Well, there's optimism here on the horizon. We've got the next CPI on June 11th. Real estate has been trending down. It's not growing as quickly. And so we've seen PEC come down. CPI in the last few months have come down. So I think the last CPI last month was a catalyst. I think we're going to see another catalyst on June 11th, coupled with this better than expected jobs report. So I think things are looking more optimistic. If the tariff impact is fairly small, and we'll wait and see what happens here, I think we've got better than average rate cuts in our horizon.
Alfredo Ortiz, your reaction?
It's really exciting overall. And look, the real story here is the government jobs are down and the small business economy is growing and the private economy is growing. This is exactly what Donald Trump wanted to do. We're inversing everything that Biden had done. Remember, last time under the Biden administration, 500,000 jobs were created, but they were in the government sector, right? And so it's so good to see that we're actually creating private economy jobs again. And look, in the midst of this is also some of the uncertainty that's coming from the tariffs and the unknowns of the tax cuts. But that's why we need the tax cuts. That's why the actions of the president on the tariffs. This is all about jobs overall, and the actions of the president are about jobs. And so, I know we haven't touched much on the tax cuts, but really, if we think about tax cuts now, is jobs tomorrow. And so that's what the president wants, and I think that's what we're seeing today.
Mm-hmm. And we're seeing this play out in real time. John Lonsky, what are your observations?
Here's what opened my eyes. Believe it or not, 126,000 jobs came from healthcare, social assistance, and leisure and hospitality altogether. That's 126,000 jobs compared to the overall number of jobs created being 139,000 jobs. And that tells me this employment report suffered from a lack of breadth, a lack of diversity. And let's not forget that many of those jobs in healthcare and social assistance are effectively funded by government, by the federal government, Medicare and Medicaid.
Mm-hmm. In terms of the sectors, Cheryl, you've got private education and health services really among the best performers here. Go through the sectors first, Cheryl.
Well, that healthcare sector is really telling, I think, of where specific jobs are being created. Because if you look at the overall number, that's 62,000 for healthcare. But breaking it down, a big gain was seen in hospital jobs, 30,000, ambulatory healthcare services, 29,000, and then skilled nursing, 6,000. Then the other sector I was looking at was leisure and hospitality. Not surprised you saw this just because it's May going into the summer. But I just want to let you know that this is, of course, food services and drinking places. That was 30,000 of the 48,000 jobs created in leisure and hospitality. And over the last year, the average has only been about 20,000 per month for leisure and hospitality. And I think this is a good sign that maybe businesses are optimistic about the summer months. And I think the other story here is that economy story, Maria, because, I think the markets might be encouraged by the fact that if you aren't seeing job losses, substantial job losses, a real negative number, which we didn't get, then that means that people are going to go just maybe start to go spend this summer. They might go actually take a trip they weren't planning to take. And look, gas prices are lower right now. We've got great gas prices. So I think this could be a really good economic story.
Yeah, even more than that is the spending that we could see from business, Steve Moore. As soon as we get the clarity that businesses need in terms of the tariffs, we'll likely see them resume investing in R&D, investing in new projects. These are long-term projects that we want to see CapEx materialize in a bigger way, and that could be a great catalyst for this economy as well, second half.
Yeah, you nailed it, Maria. And one of the things that's been exciting about the news that's come out over the last, since mid-April, when we were all on the ledge ready to jump off, and in the last 2 months we've just seen such an incredible burst, is that investment spending, exactly what you were talking about. Larry Kudlow talks about this all the time, that investment spending by businesses, which is really the catalyst for a strong economy, those numbers are really good. And so I love that. Now, the big story I think that we're seeing in this report, Maria, is America is getting older. We're getting older. And so you're seeing, I just turned 65. I could practically collect Social Security. I'm not going to retire anytime soon. But this is the big transition that the American economy is going to go through for the next 10 years. And when you look at this report, again, I want to repeat this point. The problem with the American economy right now is not a shortage of jobs. It is a shortage of workers. Just ask any small businessman or manufacturer. They're having a hard time getting the young workers, which leads me to a couple of related points. Number one, there's a big controversy about work for welfare, in Medicaid and food stamps. Absolutely, yes. Jobs are out there. There's no reason, Maria, that an able-bodied person, I'm not talking about somebody who's, infirm or in a wheelchair. I'm talking people who could be working, should be working. Yeah. Absolutely. There should be work requirements for all of these programs. And then when you look at the jobs that are being created, you guys were just talking about them. A lot of them are like home care, health care, and so on for an aging population, which means now that we have the border secure, we're going to need more immigrant workers and a lot of these programs like seasonal workers this summer, because a lot of those jobs are going to be hard to fill.
Well, I don't know about that. I mean, I look at this from a different angle. I mean, you're talking about, an aging worker, and I'm looking at it as we're living longer and we're getting ahead of disease.
That's true, too.
And sure, we needed a million new nurses. Look, we needed 1 million new nurses 5 years ago. 5 years ago, I was saying we're going to need more nurses, we're going to need more healthcare workers because we're living longer and we're getting ahead of disease.
That's
and,
true.
We're getting ahead and putting wellness as a priority. Look who we just spoke with a couple of minutes ago, the CEO of Circle. Circle is on fire. Why? Because stablecoin is the hottest thing right now in digital assets, and they're putting together legislation in Washington on stablecoins to allow that to be backed by the dollar and enable a whole new era for financial services. So you're going to see a different evolution in jobs, and you're going to see young people do the way they want to do it. It may be different than the way you did it, but I would add, let's not write off innovation, technology, and the exciting stuff going on right now in the American economy in terms of innovation. And that's what I want to know, Cheryl. Where are the jobs in technology? Because AI, quantum computing, these are the areas, engineering, these are the areas that a lot of people want to go into, not to mention trade schools. President Trump shifting how he allocates money, taking it away from places like Harvard, putting it into trade. We need millions of new engineers, and we need more electricians. Yeah. So let's not underestimate what this huge demand boom for energy is going to mean in terms of jobs as well.
Let me answer part of your question there, because if you look at the movement month to month within the technology sector in the report, they specifically mention information technology, IT, but then also financial activities and professional business services. So those are the services jobs, but those are where we're seeing, it was flat month to month, but I think that you're right that need is going to be more and more leaned on. So we may see that in future reports, and who knows, we might get revisions there. But I think, as far as the major industries, they also mention, which I think could be a good thing here, they're mentioning oil and gas extraction, drill baby drill, everybody, and then they're also mentioning construction and mining. Think about this push to get more copper produced here in the United States. We don't need to be getting our minerals from overseas, from China anymore. That is already happening under President Trump, and that seems to be reflected in this data.
Yeah, the boom in energy, and as you say, drill baby drill, that is inextricably linked to energy demand, and that is linked to batteries, electricity, and electricians, and all the data centers that we're seeing. Look what Amazon is doing with data centers. Look at Taiwan Semi and what we just saw in that quarter. So, Joni, tell us what you're seeing in terms of job opportunities right now in technology. And by the way, let me add, those are high-paying jobs.
Those are high-paying jobs, and they are in demand. We do not have enough people in the technology sector, cybersecurity, data scientists, business analysts, software developers, engineering. All of these jobs, they're six-figure paying jobs. We need more people going into these industries, and they need to get the training. We talk a lot about skilled trades. There is a high demand for the skilled trades, electricians and plumbers, HVAC. But we need employers to think a little bit differently about offering training programs, offering apprenticeship programs, both in the trades and in the professional sectors. There's a real opportunity here for the U.S. to upskill and train its workers. And I agree with both you, Maria, and Steve, that the workforce will look a little bit different in the future, but we do have a challenge that we have a labor shortage. We need more skilled people participating in the workforce.
I think you also have a great opportunity in defense, in drone manufacturing. And, if I may, I would also say that somebody needs to come up with a better idea on surveillance, because right now the Chinese and the Chinese Communist Party is the best at surveillance. I'm told by some significant American companies that the only place they can get their lenses, that they need specific lenses for cameras, for surveillance, is from China. So China has a lock on that. There's a reason that the best surveillance is happening in communist China. I wish an American company would come up with a way to beat the Chinese at surveillance, so we didn't have to have all these cameras that are, at the end of the day, ruled by the Chinese Communist Party. But, Joel, that's one of the reasons that you've seen so much money move into growth. Yeah. And investors are once again looking at growth, AI, ETFs. Tell us where your ETFs are, what they're telling you in terms of where the money is moving in investment right now.
Well, we're a little unusual in that we have a private equity position in our fund, so with SpaceX and Anduril and so forth. There's a lot of demand, and we saw it just yesterday with Circle. I mean, there's a lot of demand in trying to get into these companies before they go public, and we've got a lot of great private companies that are not yet public. They may never go public, but many of them will in the next year or two. And there's an extraordinary amount of demand and excitement over these companies, like a SpaceX, which does a lot of surveillance, by the way, globally, like an Anduril, like a Klarna that's coming out. So there's a lot of demand right now in pre-public companies, and I think the American public is trying to figure out ways to get in there. And you're seeing more democratization across lots of areas, not only in equities but also fixed income. Yeah. And the market's actually responding today, I think, in part too, for short cover. The shorts got burned very badly in May. They lost a lot of money, and I think they repositioned back at the early part of June. And I think some of this is going to be a short recovery. And if we see on June 11th a good CPI number that comes in low, we've got to remember that right now the Fed rate is 2% above where it is in the ECB, and our inflation's the same, right? It's now the same and perhaps even a little less. So I think if the job number, which came out today, is good and better than expected, and we see a good CPI next week on June 11th, I think this and the tariffs are kind of staying at they're not getting out of control in terms of prices. We could see a very strong summer, and then as you point out, and Cheryl mentioned a few minutes ago that maybe we'll see something in July, possibly. She's been very accurate in predicting possibly September.
Yeah, I'm glad you mentioned privates, because I agree with you. Privates are hot. Investing in private companies right now is becoming easier in a number of firms. You just mentioned your own private equity arm in terms of your firm at ER Shares, but there's also, we spoke with Henry McVeigh yesterday from KKR. They've got $680 billion in AUM, $30 billion of which is KKR money, and they are investing in private companies and growing those companies. So yeah, you're right. Increasingly, money managers are looking to include private companies. Investing in privates is hot right now. Yeah. John Lonsky, what's your takeaway in this whole conversation?
Well, I think you're talking about investments in private companies. There's plenty of money sloshing around. There's a lot of liquidity in the economy. Yeah, and that sort of weakens the case or the urgency of Fed rate cuts. I can't help but note that 10-year Treasury yield is up to 4.47%. And that tells me the 30-year mortgage yield may be pushing 6.9% fairly soon. This was not a good report for home builders or any other company or industry that's linked to home sales.
Well, hold on a second, because the 10-year's at 4.47%. I thought you just said 4.7%. I'm going to spell out of my chair.
I think I said 4.47.
Okay. It's
I believe I did.
Yeah, it's 4.46%. But you're right. It's up huge right now. It's up 7.5 basis points on the 10-year. And the 2 years also up better than 8 basis points. You know what else has been really one of the laggards? You've got housing as the laggard, John, but also healthcare has not done well in terms of stocks. You had a lot of issues going on with regard to healthcare insurance, led by United Healthcare. That group, as well as housing, has been really not participating in an otherwise very strong rally in stocks.
Well, a lot of that is because of uncertainty regarding regulation. It also reflects the inability of healthcare companies to pass on higher medical care costs to health insurance premiums. They're having difficulty doing that, and as a result, their stocks are suffering.
Yeah. What do you want to
can I
say,
make a
Alfredo?
quick point about
yes, please. Go ahead.
Just very quickly. The other positive thing about this report, which is very much a reversal from the Biden years, is we got a good jump up in wages. Workers want to be well paid. One of the ways of getting workers back into the workforce is to increase their wages and salaries. So according to this report, the wages and salaries are growing by about 5% annually. And think about that. We're at inflation at about 2%. So what that's telling you is real wages, real take-home pay for workers is increasing. And as we talked about for 4 years on the show, under Biden, it was falling. So that's a very, very positive thing for the American family and the American worker.
That's very good. I like that. Alfredo Ortiz, you are the CEO of the Job Creators Network. Okay. What are you doing at the Job Creators Network? Explain your business, and what do viewers need to understand about the Job Creators Network?
Yeah, absolutely. Well, thank you, Maria. We actually advocate for policies that, frankly, creates jobs in our economy among small businesses. For example, we pushed hard for the increase in the deduction from 20% to 23%, actually, and also the immediate expensing. And so we work hard to promote those kinds of policies throughout the country. We have small business advocates that speak on behalf of these policies. These are real people with real stories that know what they do because they're the ones that actually create the jobs. Remember, 2/3 of new jobs are in the hands of small business owners. And so we want to create policies that really help these guys be successful. Yeah. Again, in the past, in the Biden administration, it was quite the opposite. And so Trump understood in his first administration that small business owners were the key to growth, and he understands it as well in this one. And that's why in that big, beautiful bill, we have two serious provisions that are going to help that. And like I said, but we do have to get that certainty, right, on the tariffs, and we have to get certainty on the tax cuts, because both of those together equals jobs in America. And really quickly, too, I want to just touch on what Joni and Steve were talking about the changing workforce in America, because we're actually seeing in the small business area, I've heard a lot of groups that have been calling me that they're trying to create training industries, basically, or training companies, because they're seeing as manufacturing comes back, it's not in the traditional sense. It's going to be very advanced kind of manufacturing where the skill sets aren't there in terms of people's ability. So the retraining and retooling of a workforce, we're seeing as a big opportunity in the small business area that people are going to be started looking at.
And that's what people need to remember. You're always needing to grow. You always need to bone up on things that you may not know about. You know, you have to continue the training. Do I want my doctor to say, oh, I went to med school, I'm done? Of course not. You want to constantly up your game and keep training so that you're keeping up with whatever is out there. I mean, it's a perfect example. Alfredo, the reason that I'm looking at your company is because you're right in the middle there of the small business community. So we want to know from you, what sectors in the small business community right now are hiring?
Really, it is leisure and hospitality as they're boning up for summer months. They feel pretty bullish. And like I said, I mean, people are feeling a little apprehensive, where the tariffs are going to happen. They're very supportive of the tax cuts. In fact, we just released a poll today that shows that, first of all, the tax cuts is a nonpartisan issue, really. By a margin of 3-1, Democrats actually support the extension of the tax cuts. And 70% of our small business owners says they're going to take that savings and they're going to create jobs, pay higher wages, give more benefits, or reinvest back in their community. And so, again, we're seeing that growth in leisure and hospitality. But overall, I think we're seeing an economy that is reinventing itself. And I think small business owners, you got to love them because they reinvent themselves as well. They're realizing that's where the growth is. And there's a lot of conversation in that space right now.
And Cheryl, that's who's the biggest job creators, small business.
It's small businesses. And actually, there's a really lengthy piece in the New York Times this morning about the travel industry in the summer months and what we're going to get out of the next 3 months. And it interviewed several small business owners, and they said, well, look, I may have to pay a little more because of the tariffs, maybe the 90-day pause, it comes or goes, whatever. But I don't want to pass that on to my customers. I'm a little nervous that maybe they're not going to be spending as much this summer, so I'm not going to raise prices on them because they want to make sure they get that book of business for the summer, because that in particular in that space is what's most important to them. The other point I want to make real quick, watch the construction numbers. I have a feeling because of the breaking ground of all these AI data centers, and it's happening pretty quickly right now, the announcements, that you'll start to see the construction jobs really boost up. And that'll be another thing that'll hold up the job report month to month. And again, on the flip side, it keeps the Fed maybe on the sidelines until September.
Yeah, so what do we think the Fed's going to do at this point, John Lonsky? I mean, they keep messaging out that we're going to stay neutral. We're not doing anything, even as President Trump amps it up, like cut rates now.
Well, the Fed is going to stay neutral until the Fed has some handle as to how these tariffs are going to affect inflation and real economic activity. Now, we may have to wait until August until we have some firm idea as to how tariffs are going to affect inflation. I think all you get is a brief upturn by inflation, then it subsides. And that would provide the Fed with more than enough room for rate cuts. But
Steve,
right now, no need.
Steve Moore, I had Mary Daly on last week from the Reagan National Economic Summit, president of the San Francisco Federal Reserve. She said she was sticking to 2 rate cuts this year, but it doesn't look like we're getting it this summer. I got to tell you. What do you think?
I'm still a little nervous about inflation.
Okay.
So I'm not quite there yet. I don't want to be the skunk at the garden table, but I worry about inflation. So I can see maybe 1 rate cut. But look, you look at this report, you look at all the reports that have come out of the last 6 weeks on what's happening with the economy. It reminds me of that Beatles song, "It's getting better all the time." Thank you, Donald J. Trump.
Energy is down big, and that was one of the big issues, of course, because it's expensive to transport all this stuff. So the price of oil is quite important. Joel, are you also seeing capital move into energy-related funds?
Well, we are starting to see it now. Energy, as you point out, it has bottomed out in the minds of many. So I think there's a lot of excitement there. A lot of move. Oh, you mentioned also data centers. A lot of excitement about these nuclear power plants, and there's going to be more capital there.
Absolutely. And that's been an area that's been uninvested. Guys, amazing conversation. We so appreciate it.